Hey guys, welcome back to the channel. In this video, I'm going to be covering my case for why I believe Bitcoin is approaching a major cycle low, as well as my plan of action into the next few months. I'm on a monthly chart for the all-time history index for Bitcoin, just so we can get a good and clear picture of the longer-term trend, which essentially is just a series of 4-year cycles, and I've marked out these cycles by their lows. And you can see the first cycle really began back here in late 2011, and then it ended about 39 months later in beginning of 2015. And then the next cycle again from 2015 all the way to the end of 2018, marking about a 47-month cycle, so pretty close to 4 years. And then currently, from the cycle low that we saw in December of 2018, we are out about 49 months. So definitely within the timing window of that 48-month, 4-year cycle low that we can be expecting for Bitcoin. These cycles can also be measured from their peaks, with each cycle's bear market being pretty similar in length. So the 2013 to 2014 bear market lasted about 13 months, so just over a year. The 2017 to 2018 bear market lasted about 12 months, so exactly 1 year. And then lastly, if we go to the top that we had in November of 2021, we are currently on month 14. So 14 months out from that all-time high. And it's especially much longer if you consider measuring it from the April of 2021 peak. And the reason you would do that is because this is really when the sentiment peaked. A lot of the indicators, such as the RSI, peaked, where we had this incredible strength off of these 6 green monthly candles. And then the second peak was much more mellow. We didn't see as much euphoria. And this was very much a silent rally where we didn't see that retail interest like we saw at the first peak in April of 2021. So we're definitely within the timing window of when historical bear markets have concluded. And you might be thinking that just because past cycles have ended in similar amounts of time doesn't necessarily mean that history has to repeat itself. And I do agree. As investors, we certainly aren't entitled to anything, and there's no guarantees that Bitcoin has to have some major 4-year cycle low in this coming few months. But I do have to respect the macro uptrend. I do have to respect the fact that we are still maintaining the expectations of previous bear markets. We are still maintaining this multi-year structure of higher highs and higher lows each and every cycle. We are still following this general guide of this longer term logarithmic trend line, and ultimately Bitcoin is still in that adoption phase. So that's really my case here. And while there are certainly risks that we see a deeper bear market, a deeper pullback this time around, maybe because of macroeconomic conditions or whatever else you might have as your thesis for that, I think the bigger risk is passing up a significant opportunity to accumulate Bitcoin down 76% over a similar drawdown that we've seen in previous bear market. I do think that is the greater risk at hand, at least coming from the view of someone who does agree with and believes in that longer term fundamental value in Bitcoin, which does lead me into my plan for the next few months with Bitcoin and ultimately how I plan to go about this major 4-year cycle low coming into place, which is a DCA or dollar cost average approach, where I'm going to be averaging my buys with Bitcoin, mainly because I don't want to be fixated on one specific and single price, and I do want to have more of an averaging approach. And for this strategy, I have already accumulated some Bitcoin back in the summer months towards that 18 to 19K region. I've accumulated a little bit more here in the $16,000 region over the last few months, and I do plan to have one more buy if we do see a final leg down, a final flush out to potentially that 12 to 14K region, which we know was previous resistance back here on the monthly chart that we had in the first cycle on that monthly close, as well as the 2019 rally right up into that zone. So those are the levels I will be averaging down my last purchase if we do get that final leg down. Certainly no guarantees, and certainly we could have a bottom in place already. And for me, I think it's a little bit dangerous to be banking on that if you say haven't accumulated any Bitcoin and you do want to have a longer term position, mainly because we're just so far deep into the 4-year cycle, into that bear market, to where it ultimately won't matter looking back in say a few years from now. And it's almost like having Bitcoin back here in 2018, late 2018, and refusing to accumulate, say at $4,000 and really hoping for that $3,100 low. 23% down, obviously you had a much better accumulation opportunity, but timing that exact bottom, timing it to a percent is a very unrealistic case for so many people, and it's really not something that you should strive for because we know it's much more unrealistic. You don't necessarily have to accumulate the exact bottom just to catch this major bull run, and that's really the goal of having this DCA strategy. And again, I'm okay if we don't get that final leg down, and I'm okay if we do get it. Either way, I will be prepared if we do see this eventual cycle low and a turn over into a new bull run into the next 4-year cycle. I hope you guys enjoyed the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.